So Netflix is down big. Should you be buying more or should you be running for the hills? Well, Netflix has lost 35% of its market value since they announced their subscriber numbers, which were, spoiler alert, not great. That's got a lot of people running for the hills. But is it that bad? Or is now a great time to pick up a great stock at bargain basement prices? Let's talk about that in this video. After introductions, of course. I'm Derek West with Finance Squared. Who might you be? What is your exposure to Netflix? Do you own it in your 401k in an index fund or an ETF? Or do you own your own shares outright? Maybe you just cuddle up tight with the shared password of your closest squeeze. Well, drop a comment letting us know, and also, lovingly, tenderly, gently, smash that like button for the YouTube algorithm. And while you're in the engaging mood, you might as well subscribe and turn on post notifications if you want more great content on stock, real estate, crypto, basically anything else and everything personal finance. So you may have heard the news is in, and Netflix has started to see a drop in its stock price, which as of the production of this video is about 35% off of its highs. I'll be sure to update the current value on the screen if there's a massive difference between when I write this script and when I edit and publish this video. But if you're holding Twitter stock, then yeah, the loss in value is probably hitting your 401k/index fund, the ETF, or even your single stock portfolio. Well, you're getting hit pretty hard. That is unless you're shorting the stock. You know me, I'm not one for digression. But the shorting a stock is an advanced technique, which you should only leave up to the pros, or those folks that are really technically and fundamentally savvy. I'm not going to get into that in this video. Just know that if you suspect that the price of a stock should have gone lower or is going lower, you can make money on that stock as it goes down. But in Netflix's case, the stock has been seeing some pressure for a couple of reasons. To understand how it will affect your finances, let's examine those reasons, starting with the numbers. Netflix is a streaming service for digital video. Duh, am I right? Way to churn out the detailed, hard-hitting analysis. Now, why am I giving you the most well-known simplistic details? Because it sets us up for some of the fundamental analysis, which is important in understanding why you should own or not own a stock on an individual basis if you're not day trading. You see, Netflix spends a lot of money creating and marketing videos for the enjoyment of their subscribers. How much money is that, would you say? Well, if you look into the numbers, from 2016 to 2021, Netflix spent more than $70 billion, that's billion with a B, on their content. Their current market cap is $100 billion. They have to spend so much money on this content because they're no longer getting great content from the movie and television studios that made it so great in their heyday. So now they have to create their own content. And if you really sit down and think about it and be honest with yourself, most of the content on Netflix is, shall we say, not that great, not very good at all. So. Well, it turns out they're only really good at making the technology which makes streaming video easy. And therein lies the problem. You see, a lot of other companies and people know how to do that exact same thing and are currently doing that exact same thing in the market right now. And what's more, unlike real estate, digital properties tend to not rise in value as they age, even if those digital properties are NFTs. But I digress ever so slightly. To support the creation of those shows we all love, Netflix has to charge its customers so that they can watch the videos that they want. Again, with the simplistic analogies, but stick with me. And the fewer customers that Netflix has, the harder it is going to be to finance those capital-intensive productions, of course without debt. Which leads us to the bad news. Netflix had expected to add 2.5 million new subscribers to this quarter. The market had in fact expected up to 2.7 million, from various pundits. They know who they are. The actual number of subscribers for the quarter came in at a $200,000 loss, however, which frankly cut everyone between the eyes. This loss of subscribers led many analysts to revise their projections for Netflix downward, resulting in a couple of massive sell-off days. And it wasn't pretty. The stock fell 25% and 35% respectively on consecutive days, coming in at a total loss of 60%. That's not great. So a stock that was trading at $700 a share in November is trading at just over $200 today. I'll put the number on the screen in case it's changed since when I write this thing and when I publish this video. If your portfolio was Netflix heavy, you lost a huge chunk of your net worth. However, watchers of my channel know that the bulk of your investments should be in broad-based instruments like index funds or ETFs that track an overall index, particularly the S&P 500 or the Russell 2000, so that you have instant diversification and so that you're mostly shielded from large losses like this. If you have money to play around with and invest with after you've done all that, then yeah, investing in growth companies is something that you can and should look into. I'm a fan of less heralded growth companies for that sort of thing, however. Netflix is kind of a celebrity stock. One of those stocks that kind of gets the benefit of being a household name, which makes it not really perfect for a growth scenario in a lot of instances, not all. But nevertheless, the stock is trading at around 4-year-old levels. So the question is, why the alarm? So what? It lost 200,000 subscribers. Is all this panic justified? Let's take a look. So the main concern of people on the street, as it were, is that streaming in general, and Netflix in particular, is starting to lose its steam. Back when Netflix first started and conquered the video sharing world and vanquished its main competitor, Blockbuster, there was really only a couple of streaming services out there. The main competitor to streaming was cable and satellite. Netflix disrupted this industry by proving that people prefer to watch programs on their schedule, not at a set time of day. It also introduced to us the bingeable stream. That is a show so good that people sit down and literally just watch that one show for hours, days, I've heard of weeks consecutively. The problem, for Netflix at least, is they're no longer your only option when it comes to streaming. You have rivals like Disney+, Amazon Prime, Hulu+, CNN+. So scratch that last one. It doesn't seem like it's the best time to be operating a streaming service these days, is what I'm trying to get at. You have lots of options, so little content. But like we discussed a little bit earlier, some of the very studios that used to supply content to Netflix have come out with their own streaming services to compete with Netflix. So those services are now vertically integrated, making the content that they always used to make and charging their customers for it directly, like Paramount Plus and HBO Plus. But it's not even just that. What if all the people that are going to purchase streaming services have already purchased them? Or what if we are rapidly approaching that number in the US and Europe and parts of Asia? What if there's still room to grow, but it's not exponential or linear, but logarithmic in nature? Sorry for the math terms, folks. In other words, what if the market for streaming services is starting to hit the ceiling? Where will the rest of the growth in Netflix come from? Like maybe starting a merch store? Now don't laugh. Moving merchandise can be an interesting revenue stream for certain intellectual properties. Ask Disney or Marvel. But seriously, streaming content accounts for only 28% of all video content consumption in the US, according to Nielsen data, with Netflix taking 6% of that traffic, tied with YouTube. Like and subscribe. The United States leads the world when it comes to streaming penetration. That sounds like a dirty movie. What if, forget I said that. What if this is as many customers as streaming will ever have? What if the landscape continues to fracture and more competitors start coming up with their own streaming services? Will Netflix have the same eyeballs the way it used to? Remember, with everything there's a good and there's a bad. We just talked about the bad news and the bad perspective for the Netflix stock. What's the upside? And is it worth it to continue holding on to the stock or buying the stock? Let me just start out by saying it's not all bad news for Netflix. Those numbers that I just talked about, 28% of video in the US, 28% of video being consumed in the US is streaming video. Well, that number correlates very highly to the age of video customers, as more and more millennials and Gen Z types, well, as they get into their comfortable buying patterns, it is expected that more and more streaming service customers will come online. It really is sort of a generational thing. Gen X and people before the millennial generation, they all seem to prefer cable and satellite. Millennials and Gen Z, they like to stream and watch their content whenever they like, using services like YouTube and TikTok and others. So they're just into the groove of watching their stuff online. As more of them get money and more of them are looking to relax after a long day's work, Netflix and other streaming services are expected to reap the rewards of all of that. Netflix also has an aggressive strategy to attract an audience in Africa and Southeast Asian countries by introducing a free mobile-only plan that is designed to attract more members to be revenue neutral for the company, while of course being a customer acquisition tool. Not only that, Netflix has been testing a video game service in select markets to try and expand the value proposition it brings to customers, while also driving higher levels of engagement at no extra cost. Their focus is also on minimizing the number of people that share passwords between each other to get onto the service, which the company views as a way to help close perceived revenue gaps. Now, is that going to turn some people off? Probably. But in the end, it's probably also going to make sure that they get more revenue. But in addition to that, they are proposing offering lower cost options to help customers defray the cost of rising inflation and offsetting that with advertising targeted directly at these customers using that oh so precious harvested data. Now, the truth is the fundamentals of the company are still rock solid. They still have a ton of subscribers. Their subscriber numbers simply leveled off. There's equally good reason to believe that the best days for the company are ahead of it and not behind it. But what does that mean in terms of should you or should you not pick up the stock in an effort to try and grow your wealth? Well, I don't offer advice on this channel. That's because it's for entertainment and educational purposes only. And fun fact, I think if I had purchased this stock at its highs, I would still hold on to it and wait for it to come back up. I would not buy more, but I would not sell. Then again, I'm a diamond hands kind of guy. I don't sell stock even if they go south. That's just me. Another fun fact, If I didn't have any individual stock in Netflix today, I would purchase some, as I do think that it has room to move higher. If I had purchased Netflix stock before the November run-up, I would be buying more right now in an attempt to get more exposure to a stock that I still think has room to run. Again, I don't offer advice on this channel, so definitely share this video with someone who is paid to give advice on the subject of your finances, namely your financial advisor. Heck, feel free to share this video with just about anyone interested in the topic. And be sure to like this video if you like this video, and leave a comment with your thoughts, positive and negative. If you got any value out of this video, be sure to subscribe, because I got a million of them just like it, and you're not going to want to miss any of them when they drop. And remember, a goal without a plan is a wish, and a goal with a plan and no action is a wish list. I'll catch you guys in the next video. Peace.